Good morning. Welcome to IA Global Asset Management's quarterly podcast, where our portfolio managers and asset class experts discuss current market events, trends, portfolio allocation, and outlook. I'm Rose Marchillo. I'm a client portfolio manager at IGAM, and my guest today is Maxime Houde, portfolio manager, thematic investments. Maxime has been a key player in the US thematic strategy since 2017, and today he leads the strategy with the support of two analysts. Good morning, Maxime.
Good morning, Rose.
Thank you for being here. So, today we are discussing the US stock market performance over the first quarter of 2024, the latest earnings season and what to think about it, but also current positioning within your US thematic equity strategy. So, the US stocks are still going strong after a very good year in 2023, and the Magnificent Seven have confirmed their leadership. And by Magnificent Seven, I'm referring to Apple, Alphabet, Microsoft, Amazon, Meta, Tesla, Nvidia. What were the drivers of stock prices in Q1 of this year? How did your strategy perform too over that period?
Uh, so Q1 has been a really good first quarter of the year in terms of performance. I'd say we've seen a continuation of the end of year rally that started in late October when the Fed signaled that they were close to start to cutting rates. There's some difference in terms of how the rally has evolved to start the year. I'd say one of those differences is really that small cap, which had performed really well at the end of the year, has been lagging a bit to start the year. But what we continue to see is that the Magnificent Seven and technology overall are performing really well at the beginning of the year in the first quarter. Uh, but what's also interesting is that there's a broadening that we're seeing in the index, even if we're talking a lot about technology. But if you look, the S&P 500 right now, it's outperforming the Nasdaq. Yes, the tech sector is the best performing sector so far this year, mainly driven by semiconductor. But the second best sector is actually energy. Industrial are doing really well. Also, healthcare, banks are participating in the rally, as well as the home builders. So yes, the AI team is driving a lot of performance to start the year, but we're seeing a broadening in cyclical sector also. If we talk about Magnificent Seven, I think the name is probably due for a change. If we look at just the performance to start the year, Tesla is actually the worst performer in the S&P 500 so far this quarter, and that's driven because we've seen order for their model going down, revision are going down, and it's a company that is facing a lot of competition right now. So it's underperformed a lot, and uh, Google and Apple are also two other names in the Magnificent Seven that have lagged. Google, they had disappointing launch of their latest AI model that brought some controversy. And Apple, really, what's happening is it's all related to China. Uh, they're seeing competition from Huawei in China, and the Chinese government is trying to cut the tie a bit with Apple, which is impacting sales a lot. So I'd say we're more in a. I'd say we should rename maybe them the Fantastic Four, or maybe even Magnificent One, because the name that has outperformed the most is really Nvidia. They continue to benefit from the AI adoption and the sale of their GPUs. We need to keep in mind that last year it was a monopoly. It's still the best positioned company in terms of GPU to benefit from AI, with the only competition being AMD. And that's really translated in some good performance to start the year. Now, when we look at the fund, we started the year being positioned to benefit from this AI team and the proliferation of AI into the economy, and that's paid off. The fund has outperformed the index by a good margin, and we're pretty happy about that.
Good to hear. And so early in the quarter, we were getting earnings and results from the last quarter of 2023. What did you think of the of companies reporting for that last portion of the year? Anything that surprised you or any opportunities that surfaced?
Uh, I'd say earning overall were pretty good. We had 7% growth in terms of EPS in Q4. with an earnings surprise of 4%, which is mostly in line with historical average. I think that the thing that cemented the technology performance is really we saw a pretty big disparation between not a, a difference between the performance of the Magnificent Seven that saw positive earning revision going into earning and exiting earning versus the rest of the S&P 500 that actually saw a number being cut throughout the year. And really, we're seeing a good momentum as they're benefiting from AI. And the rest of the economy, we're seeing a bit of a slowdown, I would say, but nothing alarming. So overall, that cemented their lead. But we still saw some pretty good tone in terms of industrial sounded good. Software, they were a bit more conservative in terms of where they would see the impact of AI, but consumption was pretty good so far. Consumer, a bit more of a neutral tone, but in aggregate, the tone was pretty positive. Q1 number in 2024 were a bit below expectation, but that's not something unusual. At this time of the year, we usually see company guiding with conservatism to be able to have a year where they beat and raise throughout the year. So exiting this earnings season, I do expect that we will be able to have around 10% growth on EPS this year, which will be well received by the market.
Well, so given what we just discussed, what are the key elements in your outlook, and how are you positioned within the US thematic strategy? Any big changes that happened over the last 3 months?
I'd say we still see a lot of opportunity in the AI team in the next 18 months. And I think we already started to see a broadening, but we do think it's going to continue. Last year was really a story of the Magnificent Seven, but this year we're seeing industrial company benefit, utilities company benefit, and we think that it's going to broaden even more. The key thing is that there's a lot of investment that need to go into building this ecosystem, and that's really related to data center. So we're pretty positive on that front, where the building of data center will have positive impact for a specific industrial company. But one thing that is super interesting also is that when you build an AI specific data center, the power need, the electricity need that you have is quite important. So it should accelerate the electrification of the grid or the energy transition, if you may. And we've already seen that happen. Actually, one of the best performing stock that we've had this year is a utility names exposed to the AI team because they're offering nuclear sources of energy. And we've already seen at the beginning of the year some deal being signed with hyperscaler like Amazon. Uh, Signing a deal with a company called Talon Energy, where they would be able to get energy from their nuclear plant. So really, the team is broadening up, and we do think it's going to continue. In terms of changing the strategy, we took a bit of profit in semiconductor. We kept our overweight exposure in NVIDIA. We still think it's the best in class in terms of chip, and we do think the company can continue to outperform from here. But outside of NVIDIA, we took some profit in semiconductor, and we redistributed those profit in industrial company, mostly to get exposure, like I said, to the broadening and what we would call the AI infrastructure, but also to get exposure to more cyclical sector, as we're starting to see synchronized recovery in the market, led by US, the Europe, and China that is trying to have a recovery in their economy. So overall, not a lot of big changes because we're still super positive on the AI team. But we're navigating into the second phase of this team where it's not just semiconductor anymore. It's going to be really related to the architecture of those data center.
Very interesting, a broadening or widening of the more general AI team. Max, any last thought either about the market or about the strategy that you'd like to leave us with?
Yeah, I'd say we're really in an interesting time right now where I do think people look at AI as a specific thing, but I do think what's really interesting is that AI will fast forward a lot of other teams. And the best example I give is that I do expect that we're going to get an AI moment in robotic in the next 12 to 18 months, because the AI adoption will fast forward the technology of robotic. And I do think that we're going to see something similar in healthcare also. So really, we're having a convergence of technology that's going to accelerate the pace of adoption and the pace as to which we're seeing those new technology come in. So we're pretty positive in terms of our strategy for the next 18 24 months, because we do believe those cycle of technological adoption are accelerating, and that will greatly benefit a strategy like ours.
Well, thank you so much, Max, for your time. It was interesting as usual.
Thank you, Rose.
Thank you. Have a great day.